All right, we're back. Tasty Crypto Show. I'm Ryan Grace. Across from me is Dan Cecilia. And with us today, of course, fan favorite, Greg Magadini, Director of Derivatives at Amberdata. Greg, what's up? Just dropped my phone.
Hey,
Apologies.
how's it going? Happy to be here. Thanks for having me on again.
Yeah, absolutely. Thanks for coming back. Every time you're on the show, it seems like we're hitting a new all-time high. So we're going to keep this cadence going. Greg, it feels good again, man. Not that it didn't feel okay last time, but we're feeling better and better by the day in this bull market. I guess let's just start there. Bitcoin at all-time highs. ETH, BTC looks like it's maybe breaking out of the downward trend it's been in. Across the board, what are you looking at? What are you seeing? How are you thinking about the markets right now?
Yeah, well, one of the things I do want to contextualize, I've always said this in crypto, what's scarier, a world where Bitcoin is worth zero or a world where Bitcoin is worth $1 million? I think we're on the latter half of the escalation, but one of the themes I'm keeping in mind here is that we had a big shift in monetary policy in the 1970s when we left the gold standard, and gold basically went from $35 an ounce in 1970 to $700 an ounce in 1980. 20x essentially is what happened to gold. And I'm really seeing, potential macro trends that are kind of similar. Today we had the rumors that Trump was going to get rid of Powell, and that really sent the long end of the yield curve a lot higher because Trump's plan is to essentially crush short-term interest rates at the expense of long-term interest rates. And that's a little bit of an inflationary force, or maybe a lot of bit of an inflationary force. Great for crypto, great for hard assets, but definitely something that's a game changer in terms of sort of policy and how things work right now. So that's the scary world of $1 million Bitcoin, but very good for trading environments and for Bitcoin holders. So that's kind of the context that I want to just mention off the top here.
Do you think, beyond kind of the big picture macro, obviously shifting monetary policy environment, do you think that's what's kind of behind this bid recently, why we're at all-time highs, is that in some ways you might be seeing, I struggle to say that there's a shift away from the dollar, but there might be some cracks that have emerged. I think we've talked about this before. 2022, everything kind of changes with the sanctions that go in place and the assets that are seized post the invasion of Ukraine. Does that, in your opinion, kind of send shockwaves across the system? The cracks emerge. Is that in any way behind kind of what we're seeing? Why Bitcoin's at all-time highs? Why you're seeing institutional participation? Is it a move against or away from the dollar?
So in part, it is a move away from the dollar. So to me, that's the Bitcoin is digital gold narrative, and you have gold at all-time highs. Gold in October 2023, just 2 years ago, was like $1,800 testing $2,000. And now we're at $3,300. So I think there's that aspect of it. But then there's the other aspect where we have the procedural vote passing today to vote on the Genius Act, the Clarity Act, the Anti-CBDC Act. So that's very bullish to the blockchain industry specifically. Then you have the notion that stablecoin issuers like Circle are going to be big buyers of the front end of the curve, which is how the administration plans on refinancing debt at the short-term T-bill level because it's going to crush down interest rates. That's why he wants to get rid of Powell. So that's another kind of juxtaposition or coming together of the macro and the industry-specific micro. So that's kind of interesting. And then lastly, we have this huge rally in tech stocks, AI stocks, and that really plays nicely to the risk-on world of Web3, which is really where kind of Ethereum shines, Solana shines. And in the case of Ethereum, for example, 65% of the outstanding stablecoins of Circle are on EVM chains. And so, again, we have that very industry-specific development happening at the same time. So I hate to just point at only macro. I just think it's kind of a conflation of all of these three things at once. And that's really making the market essentially a fear of missing out, rally higher type of move that we saw today.
Yeah, I think it's a good point, and you mentioned ETH, and I think you spoke about ETH last time you were on. We finally saw this ETH BTC ratio kind of move up, break that downtrend that's been going on since over a year ago, 2024. You said it was undervalued the last time. Is there anything in the options markets or anything that you're looking at specific to ETH that could tell us where we're going next?
Yeah, I'd love to actually just share my screen here because there's a couple things, both in the futures markets and the options market. So one of the things I just want to show, just to contextualize, where ETH has come from and where it can go in terms of pricing of futures and the basis. Back in December, the basis was 18%. Today we've rallied from 4% to 7%. So that's kind of interesting. But just to show the difference in sentiment. So when people pay for leverage and pay a higher funding cost, they expect the asset to rally. That's why they're willing to pay the funding costs. If we look at the orange line here on the left-hand chart, that's the funding cost year-to-date accumulated for Bitcoin. Call it, 2.5%, 5% annualized. In ETH, we're just flipped back towards positive funding for the first time in 3 months, so to speak. So that's kind of an interesting phenomenon where we're seeing sort of a differential in pricing. But then if we look at the options market, here's the real story in my mind. If we look at dealer positioning on Deribit, essentially dealers are just short gamma all the way through to $4,000. And so there's kind of like an air pocket here. The process of getting from, call it 2,500 to 3,000 is probably going to have been a lot longer than getting us from 3,000 back to 4,000. And 4,000, we were just there back in December, and that was December of last year. If we look at the open interest across CeFi markets for futures, well, notional open interest, which factors in the price of the asset, has just had a high in December of last year, and that has just been exceeded, even though the asset is still not back at $4,000. So there's a huge increase in the participation in the futures market. So I think this is kind of interesting in terms of the participation of traders in ETH, and not to mention we're seeing the inflows into the ETFs. And if we look at the liquidation data, a lot of buy to close liquidations from the ETH shorts. So it's really a sentiment shift in Ethereum, and there's a good amount of reasons for that as well.
So, Greg, when you look at dealer positioning there and you talk about the speed at which we possibly could move from 3 to 4, are you alluding to a gamma squeeze when you look at option positioning in this expiration because dealers have to hedge that exposure if they're negative gamma?
So normally I would say yes, that's how I would look at it. Again, crypto vol is still such a small space that we're not at the point where the tail wags the dog yet. It's still too small. But it's a really good gauge of sentiment nonetheless. So we know that the street is essentially just buying a bunch of call options at these prices, and they want to get long, and there's no sort of drift in sentiment downward. But at this point in time, ETH option markets are still a lot smaller than the underlying asset.
Okay. Kind of sticking with options, sticking with volatility levels here, which when you look at ETH have popped a bit, but Bitcoin, arguably, I think last time I saw it was 39%, 30-day implied, still near a one-year low. Even though we've had the Delta move, do you still believe, and I think you've been absolutely right on this call, we put the trade on the first time that you had mentioned it weeks ago on the show, bought those upside call options or bought that upside tail. Do you still see an opportunity for those types of trades with volatility at the, really at the yearly lows, even though you've had the Delta move?
Yeah, I do. So here's how I think about it. The long end of the option expiration time cycle, the thing that I'm sort of betting there is not necessarily that we'll have a huge explosion in vol, but I think we'll have a very one-way directional trade so that the delta will just compound in one way. So that'll exceed the cost of vol on the long term. But in the short term, really when you're trading a lot of gamma, to me, gamma still seems kind of cheap. Like call it the weekly options where we are today. There's so much going on. I mean, is Powell getting fired? Is Powell not getting fired? That'll move the market. Is Genius Act, Clarity Act, Anti-CBDC Act going to get passed, not passed? That'll move the market. We just had CPI yesterday. We just had PPI today. There's a lot of fluid things in the very, very short term. that I could just see Gamma paying off buyers here, either to the downside or the upside. So there's something interesting there. Medium-term vol is the least interesting in my opinion. I think once we get past the next week or so, we're probably back in that kind of low vol grind, and then we get back to this contango curve, and then the medium term just kind of rolls down the term structure.
Awesome. So kind of sticking with those short-term weekly expiration periods for that trade specifically, or that idea.
Correct. Yeah.
Speaking of that, we took a look at the newsletter. Obviously, that gamma point you made. Is there any interesting options trades that you've seen come in, like big buys, kind of that's trying to capitalize on that, or anything you're seeing in the data there?
I actually haven't looked at it after today. Today's been kind of a crazy day, but I'm sure there's a lot of stuff out there. If anyone wants to check out the platform, we do have like a block trade sniffer, and you could just see all the block trades that go through. But I haven't had the chance to look at sort of the biggest trades going through yet today.
Anything else on your radar, Greg, outside of some of the moves here recently in Bitcoin? ETH we've hit on my screen. I've got it up about 8% versus around a 1.5%, 2% or so move here in Bitcoin. So finally outperforming. I'm not quite sure if we're outperforming yet on a relative basis year to date. Bitcoin over everything has been the trade, at least up until now.
Yes.
So you get all-time highs. It feels good. And inevitably, naturally, everyone starts to ask, well, when is that rotation out of Bitcoin into not just ETH and Solana and other larger market cap alts, but when altcoin season, Greg? Is there anything that you look at here that gives you an indication of whether you want to trade? And I know we've talked about this before, where a lot of your positioning and your activity is in the options markets themselves, not so much spot markets. But just curious in terms of how you analyze the market, is there anything that you look at that would give you some indication that if I've been long and I've been riding that move higher and higher in Bitcoin, that now I want to start to look at whether it's ETH or Solana or something that's a little bit farther out on that risk curve? Is there anything that you look at for that indication?
Yeah, so one of the things that I want to keep in mind for Ethereum specifically, from a fundamental perspective, is, if we think about Ethereum is a staking asset. So the tradable float reduces in size as more and more ETH gets staked. So right now we have sort of the highest staking percentage that we've had in Ethereum. It's around 30% or maybe 35, something like that. So all that float is kind of non-tradable. So let's keep that in mind. Now we're also getting inflows of the ETH ETF. So essentially those ETH are coming off change and going into the ETF, which the ETF is tradable, but that's still kind of a reduction of things on chain, and essentially people are accumulating the ETF, so that's good. And then we have corporate treasuries starting to allocate to Ethereum, which is also kind of a float reduction activity. So altogether, if we get this continued sentiment higher and some of that ETH gets staked, we get the spot staking ETFs. That will be kind of interesting as well. We get continued ETH flows. I think we moved to 4,000 pretty quick. There's no reason to step in front of this train. I know that we jumped, $350 today. That isn't a reason to sell ETH. If anything, I think we're going to slice through this air pocket all the way up back to that December high of $4,000 pretty quickly, which is, again, kind of a catalyst for one of those gamma plays. So I think that's kind of interesting. To me, though, the other interesting asset, and I talked about this last time, is Circle. I think people are really sleeping on Circle. One of the things, like the main argument that I hear against Circle is that it's too expensive now because it's moved up so much. Again, that to me is not a very convincing argument. Too expensive is, you have to be really certain that you can model out future cash flows of Circle. I don't think you can do that right now. And if I look at pure market caps, again, it's not that big of a market cap. We're talking about 50 billion, give or take. ETH is around the 400 billion. Bitcoin is, couple trillion. So like, it's kind of one of those things that there's a lot of upside in USDC here.
Yeah, I've got the Circle chart up here on the screen. last price of $233, up $37.87 here today. It's about a 20% move. I haven't been following the news flow that closely today. I'm assuming, and you had mentioned earlier, some things are happening with Crypto Week here with some of the legislation. I'm assuming that some of this move here on Circle is related to that. Would that be correct?
Yeah, 100%. This Genius Act passing and the co-integration of having Powell maybe being fired and reducing rates and needing a buyer of treasury bills kind of all together. I think there's a lot of fundamental reasons for Circle to be kind of successful in its stablecoin endeavor. Obviously, lower rates are not necessarily good for its T-bill holdings, but the incentive to work with Circle as a buyer of T-bills, I think, is very promising. And the Genius Act really encodes transparency into stablecoin issuers, and Circle's got a huge head start on that. USDT is going to lose a lot of market share because of its non-transparent approach to the market. And so as the Genius Act comes online and essentially creates a moat around Circle and the USDC stablecoin, I think they're going to be a big beneficiary. And there's a need for them to exist because there's a need for them to buy front-end treasuries.
Yeah, for everybody that's watching, Greg, last time he was on the show, had a great trade idea. Maybe we could walk through that again, Greg, because it was a really interesting way to kind of position this where you're looking at selling a put with a decent amount of time until expiration, but just the return on that capital, if you're trading in a margin account, that you're going to generate as a function of the premium of the put option. Obviously, you have downside risk, but that return versus locking it up into short-term treasuries is quite substantial. So I've got the trade page up here, and you can see that Circle does have an earnings announcement. It appears on August 12th. So that'll be the first since going public. But just to give everybody an idea of this trade, what would be kind of your ideal duration here when you look at where you want to sell that put?
Yeah, so the longer dated you go, the less risk you're taking. The shorter dated you go, the more risk you're taking. And then there'll be a synthetic interest rate differential. But if we just look at, say, the 1 year from now, call it, maybe the June or something like that, and we look at the $100 put, this will give us a good proxy right off the bat, simple math. What's the implicit yield on that? I can't really see what the current price is. It's a little small.
Yeah, so we've got a price of, let's give it a mid price of $11. And we've got a buying power effect here of $2,610 if you're in a margin account.
Yeah, so if you just think about the simple yield, it's 11%. If you think about the current yield, it's really like $11 divided by 89. So call it about 12%. And if you look at the yield on margin, it's pretty high. So all said together, this is a great way to get some of the action without chasing the top if this is a local top.
With these types of positions, is this something where, now granted the theta decay is not going to kick in for some time, at least on a daily basis, you're not going to see much of a change here with as much time as there is. But is this something where as you get closer to that expiration date with these positions, you manage them, or how do you think about that as this kind of decays over time? I guess my question is, do you get out of this early, or do you wait until you're basically at this point in time next year and hopefully the price of Circle is well above $100 a share?
Yeah, so the way that I view it, I want to own these shares. So for example, if we actually traded down through my strike, I would actually just buy back the put at the loss and actually just buy the shares. And that actually afforded me the opportunity to wait for my prices without essentially kind of FOMOing in at higher levels. So the way that I see it is that the big trade is going to come from owning the shares and riding those to, hopefully $300 billion market cap or whatever, $700 a share, $800 a share, whatever that ends up being. To me, that's where you're going to make the real money. But you don't want to rush into that. So you want to be patient enough to buy the prices you want to buy. So that's kind of the best case scenario, in my opinion, is we get the downward move in the shares, and then I can actually buy the shares. Now, if we don't really get a downward move and the shares just kind of sit here and there's enough time decay, I'll do one of two things. I'll either buy back the option and sell something a little bit closer that's a little bit more short dated and kind of hope to get exercise on that and kind of recycle the trade. Or if not, I'll just essentially collect some of the premium, call it half of it, and then end up just buying the shares at whatever the market price is. If we didn't move higher and we're kind of at a decent price and it's just been consolidating, I'll still get into the shares at some point and at least have gotten some action along the way.
Would you consider selling a call against that position? Let's assume you get exercised, you take assignment of the shares. Are you now looking to just ride this higher? You're bullish on Circle, you like the prospects for the company, or is this something where presumably there's still some volatility premium in here? You'd look to sell a call option against that?
Yeah, if you own the shares, earning some yield from selling a call, like you can sell like right now we're at 240. You can sell the 445 call that expires in January for a pretty decent premium. I think it ends up being kind of like 13, 14% annualized. I always think that type of thing makes sense because if we just rally to 1440 pretty quickly, you'll probably get a chance to rebuy your shares below that strike at some point anyways if you get called out. So that's one way to play it, or you can just roll up that call as well. But I definitely think generating income off, if you're going to warehouse the high volatility asset, you might as well generate income from the high volatility environment. Not generating income is kind of like you're kind of wasting away the risk that you're warehousing for nothing.
That's a great point. And I love how you always kind of look at this from that perspective of the return on your risk, return on capital. You know, that's a constant theme here on Tasty Live, but it's really important to look at it that way and always compare it to what you could get with your risk-free rate. And when you think about that, what can be at times a substantial kind of capital outlay. Dan, over to you.
I mean, I don't really have any. I guess like what I'm interested in is, we're in this situation where markets are ripping, altcoins seem to be next, ETH is ripping. Is there anything in your mind that could be a risk, like something to the downside? Because obviously these markets are super volatile. I've been through a couple cycles. On our way to 150, we could still get 20, 30% pullback. So is there anything there that you could see as a risk?
Yeah, so to your point, so from the gamma trade perspective, I think as long as we get volatility from downside or upside price action, that essentially pays on the gamma side. I think there definitely is a risk when we get to these kind of environments where things leg up very quickly. The slow grind higher is the true bull market that lasts years and years and years, and assets just compound. But let's remember, 3 months ago, NVIDIA was at $89 or whatever it was, and now we're at 170. That's a pretty big move in the largest market cap asset pretty quickly. So to me, let's keep that in mind. That's a little bit of a risk in terms of market structure, I think. And I can't imagine that if we get risk off in tech stocks, that we don't get risk off at least in altcoins or Web3 coins. I think Bitcoin still remains its own beast in the sense that gold and digital gold are moving higher for reasons that's different from tech stocks and Web3 crypto. Obviously, there could always be a risk there from regulation and things like that. I see that more as a stable play, though. I don't see as much risk in Bitcoin for that reason.
Gotcha. And then we've seen these corporate treasury stocks pop up, right? Like, I think the biggest one right now is that SBET, SharpLink Gaming, was buying up all the ETH and now holds more ETH than the ETH Foundation. Obviously, you had Strategy, which then he issued 2 or 3 tranches of preferred shares. And then I think Tom Lee launched another one. I mean, that seems to be bullish for flows. And like you mentioned earlier, ETH supply kind of coming offline, maybe being staked. Do you think there's any risk with these treasury companies? Like some of these are just copies of Strategy. I mean, is there any play there? Do you see is SharpLink a good options trade? Is there anything you can think of there?
I think the point is a great point. I haven't looked at any specific trades, but one of the things I remember back in, I think this was like 2015 or 2016, oil broke down below $50 a barrel for the first time in a long time. And the CEO, I think of ConocoPhillips, he decided to take off all the hedges on oil. And he was like, all right, take off all the hedges. This is low enough. And I remember reading this comment on, I think it was on Wall Street Journal. And he said, the comment said, you're the CEO of an oil company. I invest in the oil company because I need you to be a good oil producer, essentially. Anyone is able to buy or sell a future. I don't need you to do that for me. If I want to get that exposure, I can go do it myself. And I think that remains true with corporate treasury strategies. I don't need to invest in strategy to get exposure to Bitcoin. I can just go buy the Bitcoin myself. I don't need to invest in SharpLink to get exposure to ETH. I can just go buy the ETH myself. That used to not be true before we had the ETFs, or before we at least had to spot ETFs. And I think that's a very important thing to keep in mind. Now, obviously, MicroStrategy is giving you a levered bet on Bitcoin, and the funding is not just like this short-term perpetual leverage, but it's actually fixed-term bond funding, just like you have a mortgage on your house and you pay the mortgage. As long as you make the interest payments, you can own the house no matter what the asset price is, so you can hold the volatility. So that's a little bit of a useful vehicle for that. But I think let's keep in mind that at the end of the day, just buying an underlying asset is not a very valuable business proposition. So I want to keep that in mind. And then the second point is, leverage can cut both ways. Fixed term leverage is a little bit safer than essentially margin. So that's good. But if we actually did get a big crack or a huge shift in sentiment, probably a pretty good short.
Greg, couple more questions for you before we wrap up here. One, I want to ask you about kind of the Bitcoin volatility profile right now. And given, as you've said, it is its own animal. It's in a class on its own. It's driven by different factors. One of those possibly being, a shift in terms of the perception of the asset by much larger institutions. Pools of capitals go so far as kind of sovereign nations or sovereign wealth funds, at least. Given that, does the price matter? And what I mean by that is today at 120,000 with the participants that are entering into this space, do you think that the volatility ever goes back to what we've seen in prior years? And sure, there's tail risk, but with who's participating, does it matter to them if we get excited if it goes to 120, from 120 to 150? Does it matter if it's $500,000 or if it's 300,000 or if it's 1.2 million? Will we be thinking about it differently? Just given, I suppose, why these pools of capital might be investing in this? Like, how do you think about that?
Yeah, it's back to the full circle of what's scarier, $1 million Bitcoin or $0 Bitcoin. But to your point, I mean, if fiat is losing its purchasing power, then it's just kind of a stupid number. Like, it doesn't matter if it's 1 million or 2 million or 10 million. It's a stable value of money. Again, if we think about 1970 gold, $35 an ounce. I mean, gold was $35 an ounce for a long, long time, and now it's $3,500 an ounce almost. And 1970 is just 55 years ago. That's a huge jump. So if we rebase Bitcoin, $100,000 Bitcoin, call it $35 an ounce gold, in 50 years, it's a pretty big multiple. That's 100x essentially. Can Bitcoin be worth $10 million in 50 years? I mean, it's been done before in gold as the asset. I think the big distinction is that gold's been around for thousands of years and it's been accepted. Bitcoin's a little bit more of a new technology, so not everyone's as bought in at this point.
I have one from the chat, Greg. Will 100K be breached again, or have we found a new bottom?
So the way I would think about this, 100K, I mean, you can just do the volatility math and figure out what's the probability that we break 100K. I think that's probably the base scenario to keep in mind. It's just a normal distribution of volatility and what it looks like. I don't think 100K is like a rock solid wall, like support floor that never gets broken. We just saw it broken a couple of weeks ago and quickly got bought back up. So I wouldn't be surprised. And let's keep in mind that, I mean, I've been in crypto for a while. I've seen a lot of 80% pullback bear markets. You know, if you think about owning Bitcoin from the beginning, it's not as easy as it looks to hold something that went up and is worth a lot, and then you watch all your wealth disappear because you're in the middle of a 90% drawdown. I mean, so we'll probably get another opportunity to buy 100K.
Right.
Yeah, that's a great point. Last question for you, Greg. ETH, we're bullish. Is there a price target in mind just for fun? We never hold anybody to this. My price target for this cycle, and you can watch this on the Tasty Crypto YouTube, is 30,000 if the math plays out the same way that it has in prior cycles. Rudimentary analysis, but that's a 10x basically from here. Entirely possible, though it's a big number for people. With the rally that's underway, is there a point where you take profits or you see, given option positioning, there's the potential for this to possibly slow down? It could exhaust itself, but kind of what's the number that you have in your mind?
So the way I'm thinking about it is more from a short-term perspective, but I think we don't slow down right here, and I think we're at $4,000 in 10 days type of deal. I think there's a lot of interesting sort of gamma plays to be done in the short term here, and that makes a lot of sense to me. There's so much pent-up catching up to do in ETH, and pretty much the asset is under-owned, and the sentiment has clearly shifted. I think it just rallies very quickly, just like Circle rallied really quickly right out of the gate. It was worth $64 as the first trading opening price, even though the IPO was 31, and then 10 days later it was worth 300. So don't underestimate how fast these things can move, and the move that we've seen today is a reason to buy more, not to sell.
Awesome. Well, we appreciate that. We're going to leave it there. Greg, before we wrap things up, if anybody's interested in getting in touch with you, reading your work, you put out a great newsletter every week. Where can they find you?
Yeah, you can go check out our website, pro.amberdata.io. That's going to be our website. We can look at all the vols and things like that. You can sign up with a free email. And then we also have a Substack where we write our weekly newsletter, which is amberdataderivative.substack.com.
Awesome. Well, thank you very much for coming on the show. As always, looking forward to having you back here soon. But that's going to do it for our show. Hopefully we see 4K ETH in the short term as well. We'll be back next Monday. Until then, I'm Ryan.
I'm Dan.
Peace.